It feels pretty good to see US stocks finally charge up. The Nasdaq's up 3% overnight. Nvidia's up 6.4%. Tesla up 7.6%. While the US dollar is falling. It's happy days for commodity prices as well, with them mostly higher. But investors should still be cautious because gains like this are pretty normal in a bear market, and that's where it looks like we're headed. Here's what you need to know and watch and consider for the daily this Thursday, March the 13th, 2025. It's great to have your company. Well, we've seen a risk-on rally ignited as inflation has fallen more than expected, and investors were really waiting for any piece of good news, by the way, as a catalyst to really buy the dip into stocks that were heavily oversold. So as soon as we saw that US data come out with inflation falling to its lowest level in 4 months, and investors quickly bought into the dip. But here's 3 considerations that could see markets move in either direction. Firstly, let's consider that this newfound rally could continue if we see producer inflation fall tonight, and maybe even fall more than expected. So you might see hopes increase that the US Federal Reserve will cut interest rates perhaps in June. And that's what the bets are now suggesting, by the way, suggesting there's a 65% chance of that happening, as in the first or another rate cut in June. But stocks such as Tesla are still down 49%. Nvidia, as we can see, it's still down well off its highs. It's down 25%, and so too is Amazon, by the way, down 25% from its records. But stocks like these, as I'm suggesting, they might continue to rally up tonight if we see that producer price inflation read come out weaker than expected. Secondly, consider that retaliation tariffs are coming in thick and fast. That's what we saw indeed with Canada overnight. So that's not good for economic growth, the fact that Canada and as well the EU struck back on tariffs. And this is at a time when we've just seen the US debt level continue to push up. The US budget deficit has now surpassed $1 trillion after rising $307 billion last month. That's 2.5 times bigger than the government debt in January, or the deficit. So this narrative is actually good for some stocks, such as gold stocks, because herein we've got credit crunch concerns rising again, because as we know, the US is about to head to slower economic growth, and debt levels are now rising based on last night's evidence. This is not good news for stocks mostly, but it's good news for gold. And that's why the gold price is indeed up markedly this year. It's up 12%. Silver's also doing really well as well. Of course, silver usually follows where gold goes, and that is higher. Silver is up 15%. Newmont, keep an eye on this one. This is obviously the world's biggest gold producer. It's listed in the US, and you can also buy that on the ASX as well. That should be on your radar. Thirdly, consider this. The US Treasury Secretary, Scott Bessent, said that the US is going through a detox and could roll. So as I've been saying, when investors do see gains in their portfolios, they should perhaps consider trimming those, because stocks could be pressured lower once more, especially with further tariffs yet to be announced, such as the tariffs on computer import chips, which we haven't yet seen be announced. So that's a consideration for you that could see stocks head lower. What about the Aussie share market? Well, that is expected to see a modest lift today on Thursday at the open. Earlier, the futures were suggesting a very modest lift of 0.1%, but focus should really be on tech stocks, given the love that we saw overnight on Wall Street. Do expect some gains in tech following the positive mood shift, but the futures in the US are now in the red. So this means gains on the ASX might be in check and could be pared back a little bit. But here's a stock that I think that you should be watching. It's Block. It's the biggest. Oh, pardon me. I'm just showing a chart of Exxon at the minute. Exxon is a stock that you should be watching, and that's because oil prices are up 2% overnight. So oil stocks should get a nice boost locally on the ASX, and also globally as well. So keep an eye on Exxon. It is one of the world's biggest oil producers. Do keep an eye on short-term moves. They may not be maintained given the narrative of Trump's administration is focused on increasing production. That's likely to put pressure down on oil prices, while demand is expected to soften given where economic growth is going, and that's expected to be lower. But do consider, as we're showing here, most long-term large investors make their gains over longer periods of time, such as 5 years. That's the chart of Exxon over a 5-year period, and it shows that their shares are up markedly. By the way, Chevron is also up by a similar tune. Chevron shares are up about 60% in 5 years. But let's just go back to the tech risk on sentiment that we saw overnight on Wall Street. And this is the stock that I wanted to talk about and show you. This is Block. They were formerly known as Block, they're now XYZ. They are Australia's biggest listed tech stock. And of course, they bought Afterpay some years ago. But I think you should be keeping an eye on this stock. I think it's undervalued by the market. This stock is down 43% from its December high. They've got two divisions. In case you're not across this stock, Square, that's point of sale systems. And secondly, their Cash App. That's basically a mini bank. Both divisions, by the way, have grown significantly over the past 5 years by about 30%. And for those that don't know, their Cash App is the third most popular cash transfer app in the US, and it's about to launch Afterpay in its Cash App, which would be a significant boost in revenue because the company's been working on that, believe it or not, for the past 5 years. As I said, I do believe this stock is hugely misunderstood by the market, and perhaps that explains why their shares are searching for lows. But I do think this stock could see a nice run up in due course. Perhaps it should be on your radar. Perhaps it could be a position in your portfolio for long-term success. For more detail on the stocks that we've covered today, head on over to Moomoos app. It's great to have your company for the daily. Any questions, feedback or comments, please leave them in the comments section below.